What's going on, everybody? It's Wednesday, March 1st, and this is the Twin Cities real estate market update for February. So, look, the numbers actually don't look that bad. Now, if you think about what's been going on in national news and you've been seeing so much stuff about the real estate market crashing and things like that, Twin Cities markets have remained pretty healthy. Take a look at this. Average sales price is 427,000. That's actually up 8% from last year when things were absolutely nuts. Closed sales were down, meaning that there were less homes on the market, so less homes actually closed. So only 52,000 homes sold, which is down about 21%. We had 66,000 new listings come on the market, but that's still down 22%. And days on market, I don't know if this is good or bad, but the days on market is up about 19%. If you think about what was going on last year, you were seeing houses fly off the market within a couple of hours. So now buyers have a little bit more time. If you're in the market to purchase, you have a little bit more time to think about what you're buying. Go ahead and get that inspection and make sure that you don't have buyer's remorse when you're buying a house. Now, inventory still is historically low, although it's up 33%. The inventory right now is 1.6 months. And what that means is if there were no other new listings that came on besides the 66,000 that came on the market, we'd fly through that inventory in just over 1.5 months. And that's still with the mortgage rate at 6.85%. Now, top news right now, what's going on? Let's talk about that for a little bit. So, the reason inventory still remains low is because we have sellers that are hesitant to put their houses on the market. Why is that? It's called rate locked. When a seller is rate locked into their home, they've refinanced down into a historically low interest rate. Whereas we know interest rates were once right around 3 or 4%. We even saw some people getting approved for loans at 2.5%. And refinances happened in huge volumes over the last couple of years. Now, if a seller was to go buy and they're leaving an interest rate from 4% to 6.85%, then you imagine why somebody would be called rate locked. There's a little bit of a hesitancy there to move from a 4% interest rate to that 6.85% interest rate. Here are some positives to what can happen there if you're looking to buy, if you're looking to sell your house and buy a new one. Number one, you take all the equity that you have, you can dump that into your new property, which would allow you to buy down some of that interest and also buy down some of that monthly payment. You can also get a lot more for your home right now because inventory is still very low. And because of that, it's still very much a seller's market. Now, even though that 6.85% interest rate is putting a squeeze on affordability for buyers right now, what we are seeing is that serious buyers, especially first time buyers and buyers that are looking to move up, are still very much in the market and are still making offers. If your home is priced right and prepared properly to be marketed on the real estate market right now, your property will likely still see multiple offers. And we already have seen that in February. So listen, if you have any interest in buying, any interest in selling, or if you're just curious about what your property is worth, go ahead and click the maximum home value audit button down below. Fill out the information on the form, and I can get that over to you via email. I can mail it to you, and you'll have a really good understanding of what's going on in your specific market, and you'll have a customized valuation for your home there as well. And always, if you have any questions, you can click any of the buttons down below to shoot me an email, text, call me, or just leave me a message or an emoji reaction. Appreciate you guys.